Welcome to the Stay the Markets podcast. I'm Paul Rodriguez of thinktrading.com.
I'm Tim Price of pricevaluepartners.com.
And our very special returning guest is Andrew Pancholi. Welcome back to the show.
Thank you very much, Paul.
So, Andrew, you're a cycles expert. You've been doing it pretty much for over, many decades from what I understand. Tell us a bit about yourself and how you got into it and what you're doing with it now.
Oh, wow. Okay. Well, that's a great question. Let's go back to fascination of economics at the latter part of regular schooling. So I went on to study that at university. But the more advanced the studies became, the more disillusioned I became, as everything seemed to be derived or drilled down into economic mathematical formula and a lot of calculus. And I was just thinking, well, this doesn't really make sense to me. Suddenly we're putting mathematical models on everything. And Milton Friedman and monetarism was huge at that time. And Maggie was really big into that and so on. So what I did also find, though, at the same time was the social and economic history modules seemed to make a lot more sense. And so it was with that in mind, I went on to study these things. And the more I looked at it, the more I found that actually you can find mathematical patterns that repeat in history and markets. And if they don't repeat, they certainly rhyme. And therefore, you can project them forward. And I think, the obvious place for most people to start is something like the K wave, the Kondratiev wave. People say it's about 60 years, 55 to 60 years. And you can see that play out. So with this sort of study going on, I just sort of drilled it down further and further. And I'm now convinced that everything is mathematically related to some previous event and so on. So there are no real black swans. Everything's really a case of repetition of cycles. So that's sort of the overview.
So for people who are kind of skeptical about things repeating, what sort of things have repeated for you that have kind of convinced you that this is something that's worth looking at, both in kind of real life events and also, more importantly, in the markets?
There are super long-term cycles in market patterns. And I guess one of the key cycles is the 90-year cycle. So, for example, let's anchor at 1929. And if we head back 90 years from 1929, of course, everybody should be aware that 1929 saw this huge boom and bust, massive crash. And you can go back to 1839, or specifically 1837 to 1842, and the American stock markets had a 5-year massive collapse. They were down over 80%, and that was as a result of over speculation in the canal building area and basically cheap money and cheap land around Chicago. And what happened was that all these canals were developed to take all the agricultural produce, corn and wheat really, out from the Midwest into the Great Lakes, into Lake Michigan, and then out through the St. Lawrence Seaway and circulate them around the world. And that credit dried up very quickly there. So add 90 years to that, and you get the boom and bust of 1929, where we were everybody was cruising along in that decade of the 1920s, leading to a massive bubble at the end of it and a bust. So taking those two cycles and adding another 90 years to that gave us, effectively would give us the 2019. And what did we see there? Well, we did see the pandemic came in, and I'll come back to the pandemic in a moment. But, we saw this huge change of environment. We did have a pretty positive decade there, up till 2020. And then suddenly the pandemic arrived, and the high I think we got on the 17th of February 2020. So just within a few weeks, tolerance of a 90-year cycle, and we got a significant sell-off, although it was short and sweet. So that's one example of how these cycles repeat. And if I can bring in the pandemic cycle, so this is the idea that when cycles come together, pandemics repeat in 100-year patterns. And basically, that was something that we'd put on the radar. 1918 had Spanish flu, so we were on alert for a significant pandemic, through 2018, 2020, because these pandemics typically last 2 years. But that was 1918. And then if you went back to 1820, there was the first cholera pandemic, which really killed tens of millions of people. It spread across from Asia to Europe. then all the way, across America as well. There was a huge global pandemic. Again, you can go back another 100 years to 1720, and we saw further pandemics in 1620 and 1720 of smallpox in the northeastern part of America, where the settlers were arriving. And in fact, back in 1620, they, it's there is a theory that the smallpox was introduced to wipe out the First Nation people. So this was all part of these cycles. So you can see these 100-year patterns in the pandemic, and they also coincided with a stock market pattern. So that's an example there. There are several more examples, and perhaps one of the most topical ones is this 90-year geopolitical overlay. So if we look back now at go back 90 years from where we are now to 1935, and in fact go back to 1930, and you'll see after the 1929 boom and bust that basically we saw some really interesting geopolitical things happening, not very nice geopolitical things. So Germany would be the focus of this, where we saw the people of Germany were fed up with the reparations from the First World War. Chancellor Hindenburg was weak, and this guy Adolf Hitler started picking a lot of momentum. And there was nothing initially that dark about him. It was just all about trying to get the people, making Germany great again. This whole idea, that was actually a phrase that was used.
No, really?
And
Oh,
yeah,
wow.
yeah. If you look in some of the finer literature, so you can see this sort of pathway. So what does that tell us? By the time we got to 1935, in fact, what we did see, in fact, if I can bring this in, was mid-September 1935, in the Nuremberg rallies, where the Nazis were now gathering tremendous momentum by now. One of the things they did, they brought in laws. It was now legal to discriminate against Jewish folks and other folks. The Aryan race was now legally, aloof of other people. Well, what happened 90 years to the day from those laws being proclaimed? I kid you not. That's when Tommy Robinson had this rally in London, and you can see this expression of, yes, it's kind of, some people would argue, well, it's just against the migrants that the taxpayers are having to fund, but there was also a darker side where people who had more stronger opinions. So what this 90-year cycle did in September, it kind of consolidated what people are thinking privately and put it out there and gave it a degree of momentum. So this here is the 90-year pattern playing out, if that makes sense. So if we use that as a roadmap, then we can see there that, the outbreak of the Second World War was in 1939. So we'll be 90 years on from that in 1929. So things are gathering momentum in not a nice way, really. We are seeing that the world is going from globalization to polarization, and that's now gathering momentum wherever we go. So that's an overview. I mean, I can carry on talking more, Paul. I can give you a lot more examples, but does that make sense? That's just viewing two of the long-term cycles. The 100-year cycle and the 90-year cycle, and these are also present in innovation and invention as well, not just in markets, and of course they're very prevalent in commodity markets as well.
Andrew, do you think the 90-year cycle is a variation on the theme of shirt sleeve to shirt sleeve in 3 generations? Or to put it another way, that human nature doesn't really change?
Absolutely. I mean, I think that really is my key finding after well over 30 years of research into this. I don't want to use 40 years, but it is true.
I was trying to work out at the beginning how many decades it was, and I didn't. I wondered whether I should say.
It is 40 years for his research. That it is absolutely the case, and in fact, what tends to happen? I think that's a brilliant question, Tim. What we'll see is that you can have a major traumatic event. So take World War II. And then you can move a generation, and a generation can be 18 years, it can be 20 years, whatever you want to call it. And everybody is still recovering from that because people who are actively involved in that remember it. And I remember when I was at uni, the mother of one of my friends, she would say, "Oh, I remember we used to have to run into the kitchen and hide under the table when we heard the air raid sirens go off, and you could hear bombs exploding, and we'd be just hide under the kitchen table." And she said, "We were kids, but it was still terrifying." And so you can see that first generation really is their that they're not going to do anything. They don't want to ever go down that road again. The next generation, so take the next 20 years, whatever. So we're now 40 years after an event, roughly. But they're going to, so those people that lived through it, that had the first-hand experience, are now the more mature advisors. So when the youngster politician comes in and says, I think we should bomb this lot or do this or do that, I'll say, you know what, we've been through this before. Just step back a little bit. This isn't a good idea. Then we add another pattern, or another generation rather, and we're now 60 years down the road. And those people there, they're seen as the fuddy-duddies, and there's not many of them left. And it's kind of like, well, don't listen to them. They don't know what they're talking about, and that's all history. And nobody's actually had the misfortune to have to physically live through war. No water, no food, no shelter. Mass death, losing your families. Yes, it's going on in places in the world. There's always some war running, so you can see how that's repeating. Especially, you can see what's going on in the Middle East as well in the last year or two. But the whole point is, once you're 3 generations down the road, there is nobody that I think is emotionally connected to the trauma of conflict. And at that same time, again, you get the young buck as comes along as a politician who's so gung ho, and we're seeing this. They're pretty obvious. There are certain people that suddenly increase tariffs because they didn't like a social media post. And one of the things I'm seeing, in my opinion, is strictly my opinion, is that we're moving from statesmen, where we were led by statesmen and true politicians, to people who are really TV sort of personalities or social media people. Look at the former leader of Canada, whoever's running Ukraine, and somebody else was very much all about the art of the deal. So this has sort of all become a bit of a social media exercise, really now. And the problem with this is, if you don't drink and you have one Coca-Cola too many and you get fed up because somebody puts a bad meme out, suddenly you push a button that starts something absolutely catastrophic. And that's where I think we're at, because there is nobody urging caution. Nobody's urging restraint. Everybody's on their own agendas. So does that answer your question, Tim? Sorry, you got me on a bit of a rant there.
No, absolutely it does. Because I think it comes down to the unchangeability or the unevolvability of human nature.
Absolutely, absolutely. And you'll find, if I may just come into the 60-year pattern, this relates to war cycles, which that's a bit of a digression, but you'll see the West tends to be involved in conflicts roughly in the first 2 years of any decade at 10-year intervals. The key point being, if we take 9/11 and go back 60 years, that takes us to December 1941, 7th of December 1941's Pearl Harbor. So 60 years to within one season to within 3 months, there are the only two times America has been attacked on its own soil. So it's curious that how these cycles play out.
So for people who might be a bit skeptical and they say, well, aren't you just picking and choosing? Doesn't something important happen at any time?
Yeah, I know it's a very valid argument. And what I would say to that is something is happening all the time. Yes, there is. But can you use that to be able to make a prediction that's accurate? And the answer is no, you can't, because there's too much noise. Whereas I can categorically show you what the risks and threats are over the next 10 years, 20 years, 50 years, and even 100 years using some of these cycles. Now, it doesn't mean they're all going to be right, but it does give you an advantage over somebody that has nothing. So, in my world, everything's about incremental gains in portfolio management, trading, and investing. So if you've got a slight edge, then, you've got an advantage over everybody else. It's like the portfolio managers, having to sort of, having a benchmark to work against. Well, basically, it's only the least performing guy who gets caught by the tiger when the tiger's chasing the pack of portfolio managers. So it's the biggest underperformer that gets eaten first, and the rest get away with it. And they don't have any sort of signal. Well, if they're trend following, here's an important point really, is that if you're trend following, when's that trend going to end? And people say, well, I don't know. And so they'll just wait for a previous swing to be taken out, or 2 swings, and then they'll give back a percentage of the profits. Whereas with the idea of knowing when timing's coming and you can be prepared. So that's what I would argue, Paul.
Yeah, absolutely.
You're talking about long-term cycles, but is cycle theory fractal, and does it operate at much smaller increments of time?
Absolutely, yes. Now, there are different types of fractals and a whole series of these things. So, one of the things that we do is we break these down and we're able to identify key dates. So, for example, we're here on the 4th of November. We gave the key date of the 8th, 9th, 10th, that 9th and 10th on the S&P for a top, a major top, and a sell-off. We got that sharp sell-off. Again, gold, that major high that we've just seen a couple of weeks ago, that was documented. So what we're able to do is actually break these cycles down into smaller patterns and even down to individual days. And if people don't understand this concept, it's a little bit like, say, the three of us were, say there's a cafe near you, Tim, and you pop in there every Thursday. And then say Paul joins you on a Thursday once a month.
It will be
So,
a pub, not a cafe, just for the avoidance.
well, I'm glad you said that. I actually, my brain said pub, so I'm glad. So
You've got to go. You've got to go with your instincts.
So I'll be less withheld, and okay. So I suspect you. Well, say you're in the pub then on Thursday. Paul comes in and joins you once a month on Thursday. So you can see that you're there every Thursday, but Paul comes in once a month. So there's a slightly bigger cycle once a month, and then you finally invite me to join you in the pub, and the drinks are on you. So I come all the way up, and maybe I'll come up every 6 months on a Thursday. So every 6 months on a Thursday, all three of us will be in the pub, right? And that's the big peak cycle. That's where the three sets of waves all align. So the smaller fractal patterns are really you in the pub every week. The medium fractal patterns are you and Paul every month, and then you, me, the three of us in there every 6 months. So the idea is that all three are in there on a cycle basis. So that's a simplistic viewpoint, but we can combine a whole series of these. And of course, not all cycles are linear as well. They are based in proportion as well. So they don't necessarily exactly play out at, say, 10 years or 100 years. And in fact, that was exactly the case, as you've seen. We talked about the pandemic, and the stock market crash. Those two, the 90 and 100-year cycles aligned, and we were two months out. We were 6 weeks out on that. So that's the smaller cycle that brings these highlights the key events. And again, back in 2020, we were able to highlight that mid-February date using smaller cycles to the exact day. So that was done. So that's the benefit of this work in cycles, but it is pretty complex, Tim.
So putting all these systems together, it must take a tremendous amount of time and skill and experience.
Well, yes, there is. There are. As I say, we've been putting this stuff together for 30 odd years, and it works, and it's taken a lot of fine tuning, and we don't get everything, but we do get a lot of stuff on our side there.
Well, who ever gets everything right? It's virtually impossible, isn't it? And it's a bit of a red flag when people make claims that they get everything right, because that's obviously not possible. If it were, you'd own the world in a month, wouldn't you? But having a good hit rate is important, and I guess knowing when you're wrong is extremely important, possibly as, if not more important. But I was lucky to have heard you speak at a seminar a few years ago, and one of the things that stuck out in my head was you made a reference to there in the US being potentially something along the lines of a civil war before anybody had spoken about it. Then the film Civil War came out. Then I've heard lots of other people talking about it as well, and I was like, one of the things I think I've got a good memory for is people who make good predictions that are just so sort of that was really left field and nobody was talking about it. How did you come to make that call, and what do you, given it that we're looking at the US now, do you think we're still heading further into that kind of scenario? And with social media, it seems like we are.
Yes, that was a thing that I put out there around about 2019, 2020. Let's talk about the US in more detail. But let's answer that first question first about the Civil War. There is a pattern of a revolution pattern and a war pattern. I mean, look, everything follows. There's a few standard cycles, 90 year, 100 years, the ones we started with. But there's also an 82 to 84 year one. And that's the problem with this one, is that it's slightly fuzzy over a couple of years. But if we take, for example, the Declaration of Independence on the 4th of July, 1776, and then we add 82 to 84 years, what we're going to get there is we're going to see America is in its first civil war, the liberation of slaves, 1861 to 1864. Add that next cycle on, and we find that America is at war again. And then if you add that projection yet one more time, you'll find that this is exactly what's unfolding, that we're seeing these war situations break out. But it's not as simple as that. So yes, I mean, the cycle window for civil war really opened up this whole decade, but I think it comes to a peak in 2027. Now, let me come back to that, because I'm going to mold some other cycles into this. But let's step back. There is an empire cycle of roughly 250 years, which is sort of, I don't want to say rise and fall, but rise and change of an empire. So if we take 1776 and we add 250 years to that, then, you know, Trump is already working on this. He's already talking about 2026 being an amazing time. And did I see he's having a statue built or something? Whatever. Anyway, there's going to be a nice ballroom and all this sort of stuff. So the point is, it's a big cycle point. And these cycles just don't play out instantaneously, you know, all next year. They've been in phase for the last 10 years. You can add plus or minus 10 years. So we've got this death and rebirth of an empire cycle coming in for America. At the same time as we've got these war cycles, civil war cycles coming in. At the same time, I'm going to add another cycle. And we've already more than alluded to this. We talk about 3 generations or 60 years. So we look at what was going on in the 1960s. Well, 1963, off the top of my head, saw the civil what do you call it? Basically everybody got the vote rather. Everybody got the vote, and whilst that was great, you know, it was a great freeing up, emancipation. There were quite a few people that were not happy with it, and what we saw there was that the KKK got a massive surge in membership in the mid 1960s. Well, where are we now? You know, we're in the mid 1920s, so we're 60 years on, and we are seeing this surge of people not happy and more divisive. But as you follow that timeline along to 67, 68, you'll see that the civil rights issues really did accentuate in America. And of course, we got the assassination of Martin Luther King there in the Lorraine Motel in Memphis. So what we're seeing here is, if you're staying with the plot, there's a 60-year cycle together with the change of America, 250 years, together with the war cycles of 82 to 84 years, all coming together. So this kind of says that America isn't going to be what it was in the 70s, 80s, 90s, 2000s. It's all change. So that is why the war cycles came to head. I actually think they are going to peak around about Q3 of 2027. But of course, this isn't, this is now a red versus blue thing in America. It's, I don't think it's so much about race. I mean, yes, we're seeing all the ICE deportations and so on, but the true sort of polarization is red versus blue. And what do we have now in our worlds, in our social worlds, is that we can pick and choose what media, what news we subscribe to. So what we do is we underscore our own belief systems. You guys are way too young, but in the old days, there only used to be 3 TV stations over here in Britain, and you had to watch the news at either 5:45 or 6 o'clock or 10 o'clock or 9 o'clock.
I remember that. I remember it in black and white.
In black and white.
Well, I had a black and white TV. I remember with the buttons that you had to press to change the channels.
We used to dream of having a black and white TV. We had to make do with black and white radio.
I had to look through the window of the neighbour's house to watch TV in the freezing cold.
We would just be happy to listen to cold gravel.
Oh, gravel. So you didn't have to stand in the window of the rediffusion shop where you could rent a TV.
Oh, God, yeah. Rent a TV.
Radio rentals.
Radio rentals, that's
Blimey.
it. You've got it, Tim. So 1970, color TV came into Britain because it was all to do with the Mexico Cup, World Cup as well. But I digress. The point really is that those days you were given your feed of media for 20 minutes, half an hour, and that was the world as you saw it. Now, if you're if you have a particular bias, and most people have a bias, you will look at what it is that endorses your belief for the most part. Yeah, I mean, more advanced people will also look at what the others are saying. So this really propels the division and polarization. So that's the first point here, and that I think is what's driving civil war there. But I also want to bring in another point. Well, what was 1776 all about, or the run up from 1765, the Stamp Act, the acceleration into the Declaration of Independence, and then Yorktown in 1781? Well, it who was the other party involved? It was Great Britain. So Great Britain is also having an empire cycle return with regards to its relations with America. So you can see we're seeing tremendous change here as well. But let me stop there, and I hope that answers your question there, Paul. But yes, the Civil War notion was put out there in about 2020, I think 2019, 2020, I first saw it coming up.
Yeah, it's absolutely fascinating. I mean, you talk about cycles and events in the same way that Tim talks about quotes. They just sort of roll off the tongue, and I just can't believe how much knowledge you have of these things.
Oh, thank you. I mean, the thing is, Churchill said, and this is so relevant. Churchill said, "Those who do not study history are doomed to repeat it." And then when you look at things like the Bible, and Ecclesiastes, there is no new thing under the sun. You can see that there is something out there.
Well, he also said history will be kind to me because I will be writing it.
History's written by the victors.
So true. Yeah, yeah. I mean, that's interesting, isn't it? I mean, he was a prolific author, wasn't he, and a researcher. So, yeah.
Do you think that with regards to the new thing, AI will affect the markets or affect the cycles and change the way these things work? Or is it just another technology like the explosion in computers, or perhaps if we go back further, the telecoms, the railroads, or anything other, everything or anything other technological advance that we've seen before?
Right. So this is a great question, Paul. What I would say is that it's certainly going to advance us in many ways, but we have to put this into context. I was just looking at exactly how to find the cycle for AI to then see if we could find fractals to see where we might see a boom and bust. And we're definitely in the boom phase, and I think we could be quite close to a bust. So what is AI? It's probably a sort of quantum leap that we saw with Caxton and the printing press in some ways. But the other side of it is Harvard Business Review saying 60% of people are dissatisfied using AI who are using it for work. So AI is a tool, and it's not AI that's going to put you out of business. It's the people who know how to use AI that are going to put you out of business. So it's definitely going to help. Whether it's going to take all thinking capability out of people's minds and the ability to logically debate, I don't. There is some degree of threat to that, and are the latest generations all going to be sort of at the point where all they do is type something in and they have no view, they have no understanding. So I think it is the latest boom and bust. Did I see a crazy valuation? Was it for OpenAI of 500 billion before it's even started? There's some ridiculous stuff going on, but equally there are companies. One of them that I've been researching has been Earth AI, which is searching very effectively for minerals in Australia and around that area using AI, and they are now changing the whole way mineral exploration, rare earth exploration is taking place. So they seem like a tremendous that there is definitely a modern breakthrough there. That sort of stuff. I don't know exactly how they're doing it, but they are doing some really incredible stuff. They're doing some AI with geology there and so on. So I do think it's going to be part of a boom and bust, but it will still be here because you have to look at every boom and bust, whatever technology it brought. PCs boom and bust ish. Well, it went into not many people bother buying PCs anymore, do they? They've got tablets, they've got phones, etc. But the PCs are still around. Mobile phones still around. Fax machines were a boom and bust, and that was the end of it. So AI will be part of our fabric. Whether it'll be as exciting and as everybody's making it out to be, I don't know. I really don't know. But what it is going to do is it is going to divide, say the world of copywriting and things like that. Certain jobs will just go to that, and you will no longer speak to a human. Other sides of it is that I don't think AI can unblock your drain or, fix your roof or anything like that. So, there are still areas that it's not going to be able to touch the sides of.
There's a fantastic website called replacement.ai that says, stupid, smelly, squishy. It's time for a machine solution. Humans no longer necessary. So we're getting rid of them. Replacement AI can do anything a human can do, but better, faster, and much, much cheaper. It's very, very funny.
Great.
Well, if you like your humor black, that is.
Right.
Yeah, well,
So
we'll all be bored. Yeah.
I was
Sorry.
just, yeah, it's interesting that you're talking about the actual technology and how it affects businesses and how people might actually implement it, especially with Earth AI. But I was thinking more from a cycle perspective, whether it was big enough to actually change some of these cycles. And obviously, you've answered that by saying no, it won't. It's just be part of the cycle. But the follow-up question to that would be then: is there anything that could actually change the cycle?
Yeah, there will be. There'll be other things that come along and displace them. I mean, the worst case scenario is something like the Terminator movie scenario, where suddenly, robots become so powerful we all get wiped out. But then I'm sure somebody's got to control all these things ultimately. Everything, it's like in alchemy, everything starts with a thought. So unless you have the thought, you can't, manifest anything. But equally, somebody has to start the trigger off, unless it becomes a sort of suicidal trigger that the robots take everything over. Sorry, joking apart, that's an extreme scenario, but these are all sort of functions of boom and bust. I think AI is incredible, but it questions, well, what are we going to do? Like a vast majority of professions will just effectively be taken over by AI. But then will they be self-defeating? Suddenly it's like, well, if you can write copies, for example, using AI, but then if nobody's going to need the stuff that the copy's trying to sell because AI can do that anyway, on the next step, then that's the end of it. It becomes a self-defeating thing, and beings become even more dumbed down and probably watch even more TikTok and all this nonsense that's already dumbing people down.
Did you go into the city? Did you work for a firm, or did you have any other kind of experiences with trading a fund or something like that?
Okay, so I've never formally worked in the city in London. I have worked as a professional portfolio manager for an American firm, and I've consulted to a number of operations, including some of the largest, one of the largest funds in the world. We actually worked alongside a very famous billionaire whose name I am not allowed to. I had to sign a piece of paper so I would never mention his name out loud. So there is that. I have a parallel profession as well. But more recently, I was running a portfolio over in North America. I've stopped doing that, and so now I just focus on the research and our own trading. Having said that, there are plenty of offers on the table. So that's an overview of the sort of financial career. And I prefer to be freelance because then I can cite things that and look at areas where you're not really constrained. For example, if you go to a fund, well, the fund that I ran, which we did very well last year, we closed up 34%, beating the S&P by 48%. Was a special situations fund, and the reason I did run that was because I had free reign to trade whatever arena, be it a commodities area, US equities, whatever. And for the most part, we sat in cash and then jumped at where the cycles came in, which is something that doesn't sit well with some operations. So that's the sort of thing that has worked very well for me because we can see what's coming up. We can see which commodity markets are about to move, and more importantly, we can see when they're going to move. So that's that side of that, Paul.
So you mentioned that you had, or you have a parallel career. So I happen to know that you fly wide body jets. That must be incredibly rewarding and fun. Or it's the sort of thing that, as a young sort of guy, it was something I kind of thought would be a really, like, one of those dream careers, and it must be an amazing feeling to be flying and being responsible for such an expensive machine with all the responsibility that goes with it.
Well, okay, the cat's out of the bag now, right? So that's the reason that I have not taken on continuous city employment with a significant name or anything. So I have had followed two careers, and believe it or not, the two careers do sort of fall hand in hand in many ways. So yes, I do fly wide body jets around the world, and one of the things I've also been a senior instructor. I still am a senior instructor on these, and one of the things that we focus on when flying wide body jets is risk management, keeping your cargo, your people, your passengers, your customers safe, keeping the aircraft safe. And what we find, I mean, joking apart, but if we look at retail trading, 95% of uh, traders are broke usually within 6 to 9 months, right? They just get some money and they think they can trade and off they go. And I used to say this, well, I still do say it at talks I do on trading and investing. But I don't actually mention the flying side, but I just happen to know a lot of pilots, and every one of those pilots has the same number of landings as takeoffs. Well, apart from one guy. But the point is, joking apart, there's a 100% success rate in one industry, and there's a 5% success rate in another industry. And now, in fact, let me take that a stage further. So once I got into professional portfolio management, running funds, I realized that actually there's hardly any professional portfolio managers that deliver positive returns for more than 5 years in a row. So this applies to professional portfolio managers as well. So what is it we can learn from flying skills that can help in trading and investing in portfolio management? And this is where cycles come in, Paul. So if you know what lies ahead, and if you remember, as I say, you've only got to outrun your worst performing portfolio manager, so the tiger gets him, not you. But that's not the way to look at it. We'd rather be at the front of the pack of the running portfolio managers. The idea is that you can see an opportunity coming in. So if you can see an opportunity coming in, then you can be prepared for it. And a more recent example, well, the high in gold just 2 weeks ago was a classic example. The big example that my followers were briefed on was, as we got to the back end of last year, Trump was obviously re-elected, and the S&P was going to the moon. And in fact, it did eventually. But they were saying it was going up straight away. But we had such strong cycles coming in across the back end of December, January, and February that the only thing this suggested was that the fractal patterns that Tim was talking about, they were kicking in, and that was suggesting a major sell-off. And what we did was we called a masterclass for all our followers, and I think we had about 80 people on that, and we got them prepared. We saw the highs there at the beginning of December, so we'd already started talking about this in November. They were already protecting the downside, and then they were able to catch the downside. And then the low that came in April was a clear mark timing point again. So they added a lot more rather than those who sat through having, done pretty well till December 2024. They didn't see those highs taken out again till July this year. So that is the sort of thing that you've got. This is called situational awareness in flying. If you can see the cycle in trading, you can see what lies ahead. Now, situational awareness in flying is, say, the three of us have got fed up of your pub and we decided we're going to go to a great bar that I know in New York. So we jump on a plane, and the guys flying it are going to take us from London over to Kennedy. And what they're going to do is they're not just going to look at what the weather's like at Kennedy. They're going to look at what the weather's like in the Azores. They're going to look at what the weather's like in Iceland. They're going to look at what the weather's like, in Gander and Newfoundland. They're going to have a strategy. They're going to have a diversion strategy. But if New York is troubled, if there's some bad weather or an incident or a security alert, maybe they'll divert to Newark or Boston or Stuart Newburgh or something like that. So there are all these contingency plans. That's the key point. And this is known as situational awareness. So the more you can see and prepare for, the better your chances of success. But then, you get people in trading, well, the S&P's going up. That's it. AI's going up. Let's get into that. Just have a load of that. Well, what's your SA? What's your situational awareness on that market that you're trading? When might that trend end? What are the threats to that trend? People say, this time it's different. That's a documentary we've done as well. This time it's different. The most dangerous words in investing, but there is no awareness quite often. It's, I'll just follow the indicators. I'll follow the oscillator. I'll do this. I'll do that. And, sensible people say, well, as long as it's making higher highs and and higher lows, then we're good. And that actually is a reasonable thing. But wouldn't you like to have an idea of when that trend might be at risk so you can start taking money off the table? And that is the key point, because there are many techniques that we have. Well, not many. There are 2 or 3 techniques that can identify not only key price targets, and that's why back in looking at the S&P back in January, February, the key number there was 61.20. We published it months in advance, and we were waiting for that to be hit on the cash, and it did get hit, and then off it went to the downside. It was exceeded, I think, 61.47 off the top of my head. So the point is that if you have a target, i.e., that's the target for the 3 of us on that plane is getting to New York to get to that bar. But I probably should have said this first, but one of the things I do ask about when we talk about trading and flying and everything, and at the beginning of that, I say to, have any of you got on a plane? Of course, everybody raises their hand and they laugh. What a dumb question. Have any of you got on a plane not knowing where it's going? And everybody goes, no, that is a really dumb question. I said, right, how come all of you have got into trades not knowing where you're going to get out? All right. So that's the key point. You can get in retail trading and investing and not know where you're going to get out. If you have the right techniques, you can know where your aimed point of, where you might get out is. And if you know where that is, you've now got a risk reward ratio. And if you're going to risk 1 unit to make 3, then you're in a great place. And that's what's missing. And of course, in professional portfolio management, that is all covered for the most part. So this is all about risk management. And this is what we learn. You can bring these skills in from flying. I'm writing a book on this at the moment of situational awareness. And so that's the first thing. And then the next thing is, again, for retail traders. My mate told me down at pub, my mate said, get into this stock, get into that stock. But they've got no strategy for when the mate was wrong, or the mate's gone on holiday and everything's dumped and he's not answering his phone. Should I get out now? I'm starting to lose money, that sort of thing. So that's an overview there of situational awareness and risk management that we can bring across from aviation.
Perhaps we could look ahead and see what you might be looking at in the future and what risks there might be to basically commodities. Obviously, there's a lot of people listening to this who have an interest in base and precious metals, and of course the markets in general. So what are you seeing coming up?
Oh, wow. Well, where do we start? Lots of things here. Gold, you've mentioned. I think this is a pullback. I think we are going to go higher. I have a target of just shy of 7,000 for gold.
Wow,
eventually. Okay. If very specifically, my target is 6,891. I'm not shy about putting specifics out, and I'll either be right or wrong. And to be quite honest, I don't care, other than as long as we manage the risk on that. So that's that one. Stock market, year ending in 5. Years ending in 5 are bullish in the decennial pattern. Edgar Lawrence Smith in Tides in the Affairs of Men, published in 1939, observed this. And he did that with just less than 100 years data. Still holds good. Years ending in 5 tend to be amongst the most bullish. Years ending in 7 tend to see a decline, with one exception, which was 2017. But so that bodes well for the market. I know we're looking quite toppy right now, and we did see the beginning of an island pattern break on the S&P forming. But having said that gap now has been closed in the last few hours.
Yeah.
What else are we seeing?
Just before you continue, Andy, for people who don't know what an island reversal pattern is, it's when the market is in an uptrend. You get a gap to the upside, and then a consolidation, so it goes sideways for a bit. And this is looking at the bars or candles, as some people look at. But the point is, you get this explosion upwards with a gap, and then the market goes sideways for a bit, and then it moves aggressively down, and you get another gap on the downside, and that's what creates this phrase, the island reversal, because it's disconnected from all the other price action. So it's a pretty bearish signal, and the size of the pattern normally, from my chart reading, indicates how far back the market might go. And of course, they're just rules of thumb, because a small chart pattern might actually invoke a really big move, and sometimes it fits its characteristics, and it's just a small topping pattern makes a small pullback. So, but either way, we're seeing what you've called a important pullback here. Sorry, Andy, I didn't mean to interrupt. I just thought
that's great. Sorry, yes, I'm just being a little bit presumptuous that people know. Yeah, I mean, if we look at the cash S&P on this, Paul, let's just stay with this. The futures really opened down quite a bit today, and I think as we, speak here, we are getting that pattern playing out. We'll have to look to see what the opening is like there, and you see the other side of it, as we were talking earlier. There's that the last three bars on the S&P have all been bearish candles. So despite trying to move up, they've closed towards the lows or down in the end. So we are seeing an exhaustion of energy. I don't know. I mean, we've still got to fall quite a way down to get a down year for a year 5. So we might get a bit of a pullback. Then seasonally, so this is the quandary now. Seasonally, the 27th of October every year is a seasonal low point for the US indices, for the S&P 500, and the market tends to rally there, certainly into the first week of December. So my view on the equities is that this could well carry on up, but we are just in a bit of a dodgy area right now. But other things on my radar: grains, soybeans, wheat, corn. I think they are poised for a multi-year rally. We're still playing out bottoms here, and what I'm looking at here is based to not just on the fractals, but also on the idea that 90 years ago we saw the Dust Bowl in America, and the crops were devastated. So this here suggests that there might well be a crop shortage. Big one, I'll stick my neck out on this one. A very small market, relatively speaking, is cotton. I think cotton, I was just working with some of my peers yesterday evening. I think some pretty big cycles are coming in cotton. And I think the price of cotton is likely to head up as we go into next year. I do think March sees some important cycles. And I think this is going to be related partly, well, not partly, I think it's going to be weather related. And I think it's going to relate to flooding on the Mississippi, which tends to create booms and busts in cotton. And I've got some very specific dates there at mid-month, I think 14th to the 16th of March. What if the cotton market is either making a low or heading sideways into that point? I think that will be a major inflection point in March. Here's one, though, that I really want to run past you, which is playing out right now. And I'm just going to bring my trading screen back up here. This, I think, is fascinating. So we talked about the 100-year cycle, chaps. And let me put this in context. The global financial crisis of 2007, we were able to predict that. I was doing a seminar for a bunch of high net worths in Cincinnati back in 2006 and said, something big is going to kick off and we're going to see runs on banks, and they all fell about laughing. But what happened there was that we did see a run on Northern Rock. We saw a lot of US banks collapse over the global financial crisis. And the reason that was predicted was because if you go back 100 years to 1907, we saw the rich man's panic, the Knickerbocker crisis, again, due to the drying up of credit. Exactly what happened in 2007. So we got a massive collapse. The 1907 panic was I think it was an 80% panic off the top of my head. But the story doesn't stop there, because you can go back another 100 years to 1807 and the Embargo Act. Now, 1807 was the midst of the Napoleonic Wars, and America, seeing its opportunity to rise in global sovereignty status, decided that they would not do trade with the rest of Europe, and therefore it would effectively stop the war and increase sovereignty for America. So what we're saying here is America decided no more exports. Well, that was the biggest own goal ever because that did destroy the US markets by 80 to 90%. So 1807, massive crash, Embargo Act, 1907, massive crash, 2007, massive crash. So I'm trying to illustrate here the 100-year cycle. By the way, 1907, there was no Federal Reserve. Who did they call in to help at this time of panic? A gentleman called J.P. Morgan, which was one of the key banks involved in 2007. So J.P. Morgan again. So you can see these uncanny little twists. And just, for those of you who are interested, you can take the midpoints of these cycles. So 1857 was one of the biggest financial collapses both in Europe and America. That was a boom and bust in railroads in America. There was a lot of stuff going on in Germany and Austria in Europe. And then 1957 saw a secular bear market where everybody that could afford a car had got one, everybody that could afford a refrigerator had got one, everybody that could afford a black and white television had one. And that was that. So now you are all au fait with the 100-year pattern. Basically, I want to show you also just another example. 1720 was boom and bust throughout the South Sea bubble, the Louisiana land crisis. You see these bubbles there like that. And basically, what did we see 300 years later in 2020, the first Bitcoin boom and bust? Right, now you understand that. I want to just, especially for those of you here who are either trading currencies or based here, if we head back 200 years ago, between 1822 and 1824, British investors were placing significant sums of money in South America, specifically focusing on Peru, Chile, Colombia, Argentina, Mexico. And there was a huge wave of speculation on the London Stock Exchange and mining companies, highly speculative, highly fraudulent. And then looking back historically, guess who was manipulating these stocks? A bunch of MPs. All right, so nothing changes. But, let's put this into context. We're back in 1825, and, there's no internet, there's no texting, no faxing, and communication is just by letter on a steamship. So everything is highly speculative, and we get this fever developing, this FOMO. You need to be on these stocks in South America. Classic bubble system, classic bubble symptoms there. And also here, that not just mining stocks, but stocks based on cotton and sugar. So basically, in Latin America, mines such as Real del Monte and Anglo American surged, and basically this created one of the biggest booms. Britain was lending also to countries like Greece and Russia. So we are in 1825. We are at the peak of a speculative mania. I mean, just look at the FTSE, right? So basically, we had a massive bubble created in 1825, and this is where we're at with it all. So what happened then between August and October 1825? Basically, we had a bad harvest. So remember I mentioned grains, although I'm talking about US grains. Britain's harvest wasn't so great. Interest rates rose, credit tightened, and then as we got into November, we got a serious loss of confidence. And the Bank of England decided to expand the number of notes in circulation. And by November, the Bank of England's reserves fell below 3 million, with at least 20 million worth of notes in circulation. Well, that's nearly 7 to 1, Okay, I mean, it's fairly commonplace these days, but back then this was not. So basically, it was all doom and gloom. Rates had to go up, and banks were forced to sell securities, and liquidity vanished. And then between October and November, we saw the first signs of a panic. And there was a guy called Gregor McGregor who had a very dubious scheme going that was suddenly broke as being massively fraudulent. But by the time we got to December, so we're only weeks away, the Bank of England has nearly exhausted its gold reserves, which are down to 1.2 million from over 10 million. And on the 12th of December, 1825, there was a discount house called Poll Thornton and Company, which is a major player. That collapsed. It failed. And that brought down the house of cards. loads of British banks collapsed. The Bank of England was bankrupted, nearly bankrupted, and guess who came in? The French came in to save the Bank of England together with the Rothschilds and several other parties. But the Rothschilds and the French were the main parties. But this house of cards that began to collapse in Britain took down 7 other sovereign nations with it. And basically, over 100 banks failed in England and Wales. So the key point is, with Rachel Reeves and Keir Starmer bringing in taxation that sounds like it's going to be beyond hideous, this cycle is playing out. And if you look at the British pound, it's already down another 0.5% today. It's trading at 130.71. Not that long ago, it was up at just shy of 138 just a few weeks ago. So you can see that this probably has a long way to fall there. So that is another thing I'm looking at, Paul.
Do you have a view, Andrew, on interest rates, market bond yields, and so on?
I don't. I'm going to be quite honest with you there. That's something that I found the cycles to be far more complex. So rather than make something up, I'm going to pass on that one, Tim.
The reason I mention it is because I think it'll inevitably be linked to moves in the currency markets as well. If you share our thesis or my thesis that basically the G7 is beyond imaginably insolvent, and so we're going to face a debt crisis probably internationally, which may already have started. And there's something like a 40-year bull cycle in interest rates that broke conclusively negative about 3 years ago. So Russell Napier, who's one of my favorite strategists, has said you don't want to own any bonds at all. You want to own none, because these things tend to move in quite long-term cycles.
Well, that's really interesting, because what I can tell you, I'll just give you an overview on this, because I've got a client who's paying a lot of money for all this significant operation. But I'm seeing a significant currency crisis and a change of direction as we get into April, May next year. And I'm actually seeing that as a critical window for a whole series of markets. I think we're going to see a major economic storm at the back end of Q1 and into Q2 next year. There are so many timing points coming together. Something very big is happening. But the outlier there was the British pound, which had the time cycles for now. So I think we're in a pretty dangerous place in Britain here.
So what are we seeing? So we're seeing the UK getting hit, both stock market, obviously sterling's already wobbling, and that's going to accelerate. Will it then recover into next year and then get hit again with everything else? Is that what you're saying, or do you think sterling will in the UK will be down and out and then just go further down next year?
I think sterling could well head further down next year. Now, remember, if we go back to, so this is this idea of synthesizing all these things we've talked about. The 250-year death and rebirth cycle is impacting Great Britain because America broke away from Great Britain in 1776. So I think Britain is at very much a turning point. I do think, though, I'm not convinced that this government is going to last. We're certainly not, I don't think it's still going to make its full term. So I think something will turn around. I'm going to be short to medium term bearish on the pound. And what I do, Paul, is that I look to chart patterns to try and identify when both price and time points are coming in. And there's not quite enough evidence yet to give me a good handle on where we might well get to. So you see, this is another point really with this ability. You might have a forecast, but you can't trade the forecast. You can only trade the market. It's the same with flying a big jet. You've got a plan, but if a thunderstorm pops up right in front of you, you are not going to take that jet into a massive thunderstorm, because that can finish off even the biggest of aircraft. So you have to take avoiding action, and you have to be nimble, and you have to trade what you see, not trade what you forecast. And therefore, on that basis, what I'm really saying is that I'm going to let the market tell me. But at this moment in time, I am bearish on the pound. I think, the FTSE, see where it's trading this morning, but basically, I think 10,000 is going to be a very important target for the FTSE. I really do. I think there's going to be some significant resistance there.
The FTSE's done pretty well compared to its European counterparts. So, for example, you mentioned the French bailing out the UK, but the French stock market has struggled to make a new high this year, and it's hit its high and come off, and the German stock market has been pretty much sideways since May. We obviously recovered on the tariff reversal that you called, and so everything kind of rallied up, but the market seemed to be fragmenting a bit, and the UK had actually done quite well. Sometimes I see that as a link to the weaker currency, because the weaker currency acts like a interest rate cut. And so
Yeah.
that happens up until a point, and then until the market starts to get worried, because of course it might help to sell product abroad if your currency is weaker, but it might mean that you can buy more bonds, but it also means the values of those bonds are going down as well because the currency is going down. So there's that kind of fine balance where you see it work for a little bit, and then you see the market go, oh, this is moving a little too fast. I think I'm going to get out my bonds before the value of the currency goes down. And then that's what pushes the interest rate up, which is what Tim's looking for. And so I think we're at an interesting point where the equities are performing well, but if what you're saying is correct, that may not last. And even if the 5 call that you were saying, a year's ending in 5, I'm presuming that relates more to the US and not to the UK. So there can be some divergence as to whether it will go down and then rally back up towards the end of the year. But you would expect potentially, I guess, the US to go up, but it may not necessarily pull the UK with it, if that makes sense.
It does make sense. I mean, I still think in terms of looking at patterns and cycles, that the FTSE does, referring it back to the FT30 before, was it 1984, wasn't it, when the FTSE started? It did show these same patterns. So I still think we could see an up year on the FTSE. And then just your point there, if we take Europe and this whole area, obviously we are no longer part of it all. And the whole Europe area might be a bad neighborhood, but we're probably the best house in that neighborhood at the moment, probably because we're dissociated from the EU. So I would say that, highlights and France is a terrible mess compared to us. But, see, nothing really bodes well for Europe at the moment, does it? And the blame, to some extent, the political blame or the popular political blame that people are seizing on this migration issue. So it's a little bit scary. It's quite interesting and it's a little bit scary, but those are just my thoughts on that.
Do you think the UK will have a like looking many years ahead? Do you think the UK will have a revival? And do you think it will output? I mean, it's a difficult call to make, but for many years we've looked at the European project as one that was put together with good intentions, but without really understanding how markets work, and that the different rates of growth between the countries create pressures, and effectively you got tectonic plates that are pushing against each other that can withstand a lot of pressure, but eventually you get this fragmentation that could cause the euro to go into some form of collapse. And I must admit, I was calling for a collapse in the euro about 10 years ago and during the crisis, and that didn't happen. I got it wrong. But it's like you say, with some of these long-term things, it's you can have the view, you can see the pressure, the market could withstand it for quite some time, but then it all happens very quickly. So do you think that we will be better out and with this, what was supposed to be Brexit, but not really? Are we going to be in better shape than Europe going forward with our currency and an individual currency, with the cycles as well? Or do you think our future lies folding back into Europe?
I think so. The first part of this question was, is it doom and gloom forever? Well, no. In the world of cycles, after a downturn comes an upturn. So we're not doomed. I just think we're on a slightly rocky road at the moment. I actually think that Europe's probably in a worse place than Britain is, than the UK is, purely because of this common currency, and it's only going to take, or we're already seeing it. There'll be I do think the euro is very much at risk. I think, and one of the best things that Britain did was not join the euro, because it's only going to take one. There's so many people in the euro. Any of those could effectively go rogue and do more damage to it. But supposedly everybody sticking together keeps it, reasonably solid. But I'm not convinced. I think we're better off where we are as we are, and I think that we will see an upturn. But let me just put this into a bigger context for all of us, right? And something I don't think we've mentioned. We talk about 90-year cycles. We talk about 100-year cycles. So we talked about the 90-year cycle of the socio-economic climate from the 1930s. So that led up to 1939 and the outbreak of the Second World War. So 2029 will be the 90-year cycle from the outbreak of that war. But 2029 will also be the 100-year cycle from the 1929 crash. So with that lying really just 4 to 5 years ahead, if we look at the stock market and the 100-year pattern, it was very bullish. So the markets could head quite a lot higher, okay, into this sort of notion that we are heading up towards something bigger towards the end of the decade. The 100-year pattern was really quite a one of abundance, really. There's a lot of money being made, and there was a lot of expansion, and RCA in America, and aviation sector was starting to grow everywhere, and so on. So I don't think it's all doom and gloom. Coming back to Europe, Europe's a tough one because when we had the Brexit vote, that was 2016, wasn't it? June 2016, off the top of my head. I know the referendum date was 45 years to the exact day back in the 1970s when there was all the discussion of the common market. And the French were adamant that Britain would not join the common market. And they finally gave up on that exact day in June, 45 years ago to the day. So that would be 1971. So, you're still back on your black and white TVs there outside radio rentals. But if you go back 45 years back from there, what was going on then was that the League of Nations Spain left the League of Nations because they were fed up with German dominance. Well, if we go back, 9 years, everybody was saying Germany's getting a bit too powerful. So you can see that these, the League of Nations and the European Union, slightly different things. One was more political, one was more economic. But these things work in cycles and they have booms and busts in themselves. So I just want to point those cycles out. But I do think really that we are in a situation where Britain, I think, is best kept out of there. But it depends what damage this government do really with these crazy policies. And, again, are we seeing statesmen here? Are we seeing a chancellor with a great deal of experience in these areas? I don't think so. So that's what worries me is that, amateurs are playing games here.
It's quite shocking, isn't it? I mean, it's almost like how is it that, I mean, whatever you think of Trump and whatever you thought of Biden and whatever you think of Keir Starmer and Rachel Reeves in the UK, surely we've got better talent than that. Surely somewhere. I just can't. I can't get my head around it. It's just really.
We have.
Is it engineered to be like this? Sometimes I think it must be, because why else would it be like this? Or I can't, I just can't. I hate politics. I really do. I don't like it at all. I like the markets, but you think about how much goes into the financial, having worked in the finance system and seen the talent and the energy and sometimes it goes too far, of course, but that's the nature of the beast. But the amount of talent and expertise that's there, and then you look at the people who are actually running the country, and the people who work, supposedly the economists who they've got their fingers on the pulse and the levers that they're pressing that are affecting everybody's lives, and you look at, they've got no idea how to run a business, or they don't really understand the markets. It's shocking.
I totally agree with you. And one of my perhaps the most intelligent friend of mine that I was at school with ended up as a treasury advisor, a very senior chap. And it'd be unfair to reveal his comments, other than he did state the guys he liked to work with who really knew what they were doing. And amongst those are, I know I'll just say the positives. He was a big fan of Kenneth Clark because he actually had a proper understanding of all these things. And equally, he said there were other people that really had no clue. And now maybe I'm just getting older and cynical, but when you look at politics, it's kind of like, well, it's a bunch of cronies, and it's like, what have you won in the raffle? Oh, I got foreign secretary. Oh, I got chancellor. Oh, I got, and it's like all change. They're clueless. They're not qualified to do these jobs. Some of the people. And that's my whole issue, is that we don't really have statesmen about. And in fairness to Trump, he's a TV personality. He's got some good ideas there. He's done some good things. As well as also destabilize the world as well. So that you could argue his heart's in the right place with some things. There are other things that might not necessarily agree too much with, but it's certainly a lot better than the previous administration, right?
Yeah.
I think the problem we have is that we have no politicians with any experience of business or anything else except politics, which is pointless. And in any case, they're not really the ones calling the shots, because it's the blob which is calling the shots. And the blob is basically, for want of a better phrase, entirely communist now.
For people in America and outside the UK, how would you describe the blob, Tim?
The administrative state. So, or the deep state works in both contexts. So, I think that the key distinction between North America and the UK is that when you have a new president, all of the previous administration gets cleared out, and you start with a clean slate. Whereas here, the civil service goes on forever.
Right. Yeah, because the civil servants work for the government, and they
work for whichever government is in power.
Is in power. Yeah. And
I mean, one of my favourite jokes is that the Ministry of Defence has launched a new civil service bomb. It doesn't work and it can't be fired.
Was that yours? That's very good.
No, it's not one of mine. I'll cheerfully claim it, but it's not one of mine.
I always wonder. I mean, I say it's easy to criticise, and we've seen what governments have done over a long period of time, and it is very frustrating. And
I don't think we have a functioning democracy anymore. The government has arbitrarily, for example, said we're going to have digital ID. It was never in the manifesto. 3 million plus people wrote a petition against it, and the government said we're going to do it anyway. If that isn't basically the definition of tyranny, I'd like to know what is.
It's actually quite incredible, because the hot button topic being the immigration, and if they're trying to bring it in because of that, it's actually. I mean, who are they trying to kid?
No, it's divide and conquer.
I mean, if you look at the digital IDs that they have in Europe, it's not made any difference to immigration in those countries. So why? And on the face of it, how is it going to stop anything? It's just not. And there are other ways to do it. So it's
just a ruse. It's just their excuse. I mean, we've gone full Orwell, and people have difficulty accepting it, but it's true.
Yeah,
that is so true. Yeah, and I think here's the bigger point. So all these things we're talking there about the micro things that are annoying us. Well, not even micro, but the key points are like immigration. They're talking about digital ID. We're now going to get tax hikes against the manifesto pledges and so on. So what does this do? What did this do back to, look at Germany, which had all these things reparations placed on it. They all got fed up, and suddenly all these people are being ousted by outliers. So take Farage, for example, and Reform. Now, he's a disruptor, okay? I'm not sure if he could be prime minister. I mean, he could be prime minister easily. Whether he could do the job professionally, I don't know.
Well, that'd be no different to any of the others, though, would it really?
Right. I mean, he might be able to do it. I've met him on several occasions, and when we talk to him, he's quite an interesting guy. But the point really is that all this stuff is really annoying everybody right now, and it's only going to take a disruptor to say, right, well, we don't trust any of these people anymore. I'm not having a digital ID. They're forcing it on me. I don't want to pay all these taxes. I'm fed up with all this migration and paying the taxes for the migrants as well as paying more taxes. And people are sitting around getting too much on benefits. There's going to be somebody that kicks all this off. And that's how you get the rise of the extremist. And this is exactly the pattern we're following from 90 years ago. Whether we like it or not, somebody is going to come out if they aren't already there. There are people there that, it's right, we've had enough. And that will gather momentum. That's what we saw in mid-September with Tommy Robinson's rally. You then get people saying, right, well, that's it. If you're going to keep doing this stuff, this is what leads to revolution, I'm afraid. And revolution does sort of follow these patterns.
You've got a a CV that's quite incredible. You haven't mentioned that you're on the board of the Foundation for the Study of Cycles. Do you want to tell us a little bit about what that's about?
Foundation for the Study of Cycles was set up in 1941 by President Roosevelt. And the purpose of it was to see if the 1929, well, not so much the stock market crash, but the Great Depression of the 1930s could have been forecast and therefore prevented or at least reduced in its magnitude, because obviously that's all the New Deal. So that was the premise there. And it was originally set up by the government, and then it kind of broke away, and it was run by or led by Edward Dewey, who did a lot of research into mathematical patterns. And one of those things that came out of that was that there's a very dominant 18 to 18.6 year cycle. So again, Tim, we talked about generation cycles. You mentioned that earlier. 18.6 is a typical generation cycle. And you'll see that a lot of not just markets, but a lot of human behavior, a lot of animal behavior, behavior in nature and so on follows this 18-year cycle, the growth of different species, the decline of them, and so on. So this was really devised as a think tank that advised the US government. Then it really gained quite a lot of momentum up until the 90s and early 2000s. Then it went into, it was privately sort of taken over. And now we've managed to restore it to its original sort of prominence. And we're doing a lot of research now. It's a non-profit now. And we're trying to put research in to see how we can help people. And for those who wish to listen, those who believe in cycles, for example, I've given you a clear roadmap. There is a potential of some huge financial collapse as we get to the back end of this decade. There is a potential of significant escalation of warfare towards the back end of this decade. We've still got hurdle points between them. But the idea is that we're seeing something that you can almost plan for. It's not very nice in this time, but there are times where you can also see the very positive times of booms and so on, and you can harness that. But if you're prepared for these things, it's increasing situational awareness. So that's what we're doing. So it's a non-profit. We had our first in-person conference in New York back in June, and we're going to have another one coming up. And not only did we talk about market cycles or people talking about the impact of solar flares and on human behavior and markets and all sorts of things. So it's quite a fascinating organization. We are trying to raise funds so we can do more research, and we're trying to catalogue the archives, only parts of which have been published. So I think that's something that's pretty exciting, and hopefully we can help a lot of people. It's not just aimed at the financial sectors. There's people doing all sorts of work on weather and so on. So it's nice to be amongst these people. I mean, for those who are real cycle aficionados, there was a guy called Raymond Wheeler who plotted all the climate cycles and showed how these play out over thousands and tens of thousands of years, and that global warming is just a subset of that cycle. So we've lived and survived these things before, just like we get global cooling. And in fact, in my opinion, looking at these climate cycles, we are heading into a point of potential climate cooling. So that's where you look at everything that moves in cycles. So it's basically a collection of geeks, really. Some of us like to go to the pub and not others.
Yeah, no, it sounds fascinating. I mean, maybe I'm just a geek, but anything that's looking at something from a kind of technical point of view. Do you stroke they produce research, or and do you have like a house view of things, or is it very much like different board members, different people have different opinions or use different technology to come out with your potential forecasts, or do you make forecasts even?
Right. Well, the foundation per se, the board members are sort of, I don't know if there's 7 or 8 of us or whatever there are, will tend to, some of us will put some work out and we'll put it out independently to our own sort of relevant businesses as well as to the foundation. And so what do we have? We do have a journal that comes out every now and then. It used to come out quarterly, but we've just sort of, we haven't put one out for a few months or a year. There is a YouTube channel where we have a lot of stuff going out, probably 2 or 3 things a week. And in that, there is an app that's created by the The chairman at the moment is a guy, Dr. Richard Smith, and he's created an app with Lars von Tienen, which shows how it's basically to do with data signal processing. So you can make cycles projections using those curves. And it doesn't just apply to market data, but any data you want to put, if you want to put in rainfall in Peru, Lima, or Lima, Peru, or whatever, or anything like that, you can put that in and you can get a projection. But it is data signal processing, and therefore it does have its limitations. When you put it into markets, you can see certain potential, but again, you've then got to put structure around that to be able to harness the trade and work out the risk reward ratios. But that's a very powerful app, and it's available to all members. And I think membership's just a couple $100 a year, really, to access that app. Then we've got more advanced versions of that. In terms of the people that sit on the board, yeah, we put out. Sometimes we'll have conflicting views, and we probably have a couple of online conferences. I think we have the beginning of the year thing, and then we're now meeting annually. That was a lot of fun, by the way. But so people can see different viewpoints, and every now and then everybody agrees on the same thing, and usually that will then happen because the cycles all align. So it's quite nice in that there is no official line on anything. And best of all, the scientific side of it is quite good because they do sponsor some really interesting people. Ordinarily, people who don't have the means to develop the research. So it's a pretty fun place to be. I think it's a pretty exciting place to be as well. There's a lot of good stuff there. So that's the overview of the foundation.
Tim, I'm going to ask more questions unless is it okay?
Go for it.
Yeah. Okay, cool. So you talked about their proprietary technology in their app. What could you tell us about your proprietary technology and how you fine tune your cycles and make your predictions?
Well, let me bounce this back at you with a report. You are a subscriber. I mean, how do you find it? Do you find it useful, or what angle do you get on it? And I'll explain the bit of the background to it momentarily. But if I throw that back at you, Paul, as somebody who's seen it, tell me what works for you, and then I can build it out from there.
Well, what you put in is specific dates to look for reversals, or to look for a like putting two things together. If you can see a trend is moving up and you've got a date that you identify, you can be on alert that the market might be turning on those dates, and you give a relative degree of certainty in the sense that you identify the more powerful dates. And I know that when you were calling for the reversal of the markets that we would call the Trump tariff top, that was something that you actually called a meeting months before to talk about how this really important date was coming up. So it's very useful, and it is something that I would suggest people look at it for themselves. But for me, I think it's really great to know that there's a date coming up. For my own analysis, I'm a trend follower, so I will look for the market to break out and to move higher. The risk of the way I look at the market is that it can suddenly hit a brick wall, and that will come out of nowhere. And the blending of your research is that you will say, this is the brick wall, potentially, look out for this date, and then you're on alert that the market's going to turn. Now, I'm not short-term trading the market so that I'm trying to catch every turn, but I can see the value in A, knowing when you're going to get a turn, and B, knowing that potentially it's part of a bigger cycle that might see the market continue further up and therefore gives you buying opportunity. So it's extremely valuable.
So with that in mind, that's exactly it. So what we do is the report is there. I crunch all the cycles, and this is where I will talk about the 90-year cycles, 100-year cycles, whatever, a 72-year cycle we haven't talked about. And then we fine tune them, as you said, Tim, we use the fractals, and we can fine tune these down to the day. But if we get the pub scenario where the three of us are there in the pub together, that suggests that macro cycles are coming together with micro cycles, and that's where we get a significant change in trend. So the followers of the market timing report tend to use it to add to their decision-making processes, and that's where I think it's the most beneficial. There are so the idea is that if you know a top's coming in, you might want to increase your hedging or take some money off the table, just protect that position or raise the stops and so on. Equally, if we know there's a cycle coming in, you want to see that market play out as a top or a bottom, wait for the market to confirm the change of direction, and then you can get on board fairly early. So the idea is that if you know a time cycle's in, you're not having to wait to see higher highs and higher lows. Yeah, you want some degree of confirmation because remember, there's only one thing we trade, and that's price, and that's the pattern of the market. That's it. Price is the only thing we make money off. So that's the point of the market timing report. And in there, I also put some commentary in. So, for example, I was forewarning people about how we could see some real problems in Britain. And as I say, when I wrote this, that was a month before last edition. The pound was up at 135, over 135. As I say, it's 130.60 right now as we're trading. So, that I put the chart in for the pound in that. So that's the purpose of the market timing report. The other things we use are I've created a seasonality platform using AI, which is very topical. We talked about AI. And that gives us the opportunity to literally look at where the highest probability trades are for any few days and whether they are shorter term trades for over a few days, couple of weeks, or whether they're longer term what we call investing trades. And this is just crunching through data on equities, American equities, UK equities, just the main ones, some Far Eastern equities, Australian equities, all the commodities, main commodities, all the financial instruments, everything that's out there. And this really gets the odds in our favor. So with that in mind, and if we're looking at gold, for example, and we have big turning points for gold, and they're coinciding with what's happening in the seasonality, we have now increased our odds on how this might work. So that's the seasonality platform, and that fits very well with the market timing report. Then the next thing that I really do like, because I'm more of a commodity position trader than anything else, is what the smart money is doing. This is a commitment of traders data, and we've created a platform where this is known as the Master Traders course and professional platform, where we crunch the data and we can see where major moves are coming up ahead. So these are potential portfolio trades that are going to last months, if not years. And you can see where the smart money's accumulating to go long, or the smart money's pulling out, and how we're going to see a top come in, and so on. And one of the key points there was Paul, you'll have been party to it. You could see how professional money was buying the VIX, or it has been buying the VIX to an extent never seen before. So the professionals are actually worried about this massive boom up we've seen in the stock market. They are definitely buying insurance, and they're buying insurance at the highest rate in the history of this data. So the smart money not only sort of shows us where the big moves are, it can also see where trends are going to exhaust. And one of the things with trend followers is that the non-commercials or the hedge funds, they tend to be wrong at extremes, i.e. they have got their highest long positions at the top and their highest short positions at the bottom. So when we see the we split all these down, and we can look at what the hedge funds are doing, and suddenly if they are at the highest level of shorting positions that they've ever been in, say sugar or gold or silver or whatever, we know that they're going to be wrong at those extremes, and we're going to be alert for a significant change. And we can fine tune that with the data from the market timing report. So we can fine tune it to a week or a day or so on. And that's, so for example, with cotton, I mentioned, I know it's a very small, relatively illiquid commodity, but we've got macro cycles coming in for March. We've got intermediate cycles coming in for the third week of March. And we've got these very powerful daily cycles coming in around about, I think it was the 14th, 16th, I said earlier, around about that point off the top of my head. So, and we can see that the smart money is accumulating cotton as well. So that's something, it might take another 3-4 months to get there, but it's a big move. So that's the sort of stuff we look at in portfolio management. And then another fact that we also have reports on grains and timing the grains. That's the soybean complex, well, just soybeans, wheat and corn. So those are, because they trend so well, they're tremendous opportunities. And when they start a trend, they do go on. And then finally, what we found was that people came along And some of them are retail traders, and they were saying, "Well, I don't know what to do with all these dates." As I say, the professionals would just say, "This is part of my decision-making process." And we have some of the biggest funds in the world buying this information. But the individuals, some of them didn't have a trading system, or were not able to sort of process this information. So for them, we created the Market Timing Report trading course, which is the very best of the techniques that I've used over the last 30 years, including those that we used at the fund, which performed very successfully. So not only do they show you how to line these timing points, they also show you how to create your risk reward ratios, where to place stop losses on a more simplistic basis, or where to hedge on a more complex basis. So that's the main suite of products, and of course I obviously provide a consultancy service as well. So that's the overview of the range of products that we have, Paul.
So if somebody wanted to get a taster of your research, would you be able to provide something for our listeners to try out?
Yeah, sure. I'll tell you what we can do. I recently wrote a convergence report on how these big cycles are coming together and what it means for us all over the next few years. So if people would like that, we can definitely make that available as a complimentary report. And of course, if they want to try the market timing report out itself, they can go to markettimingreport.com and try that. And if you've not tried it before, we always offer a 28-day, no questions asked, money back guarantee, because it's not for everyone. We know it's not for everyone. It's a very powerful tool. And it's like giving somebody a Ferrari when they've just got their provisional license. So that's it. So there's no risk there for people who've not tried it before. But as I say, yeah, we can make the convergence report available to everyone. That would be great.
Brilliant. No, thank you. That's very generous of you. Tim, did you have any final questions or?
No, we covered quite a lot, so I'm happy.
Yeah, great. Andy, was there anything that you wanted to talk about that we didn't ask you?
No, I think we're all good. The only thing, as you mentioned, was getting the British pound and that 200-year cycle from Britain coming in.
Yeah. What's so fascinating about all these cycles is that you have to have either the presence of mind to be recording these cycles and these events, or you have to be old enough, and some of them you can't really live long enough to see them happening again, or you have to be old enough to know that things are repeating, and you learn that through time. And I think it was Taleb that was saying that the Senate in America is to represent the older people who should have experience, and the whole idea of going to your elders in society, in cultures that seems to perhaps be slightly lost now, but that was a really important way of learning, for people to learn about the risks of what had come before. And one of the big problems with social media now is that all the information is coming at young people from so many different angles. There is so much noise and really very, very little signal. It's very hard to get through to them, to pass this knowledge on. So you have the most powerful tools out there to broadcast your message, but at the same time, so does everyone else. And it just sort of, will they really realize the power of all this stuff until, perhaps they're older? But it's, the whole subject is absolutely fascinating. And of course we've got to have you back on. But before we do that,
Paul, let me just add to that. Right?
Oh, brilliant.
Because we've got so much social media going on, and because we've got the ability to focus and see only what we want to see, there is so much noise. Whoever it is that's running this whole thing, whoever it is, and I don't mean up there, I mean somewhere in the world, has done a great job of dumbing everybody down to the point of everybody's walking into the abyss without any idea of anything, because they're just not looking beyond they're not looking beyond 2 feet beyond their phone. That's it. And that's why we've got these problems coming, because, like exactly what you said, the elders of so many cultures used to sort of provide guidance, and they still do to some extent, but nobody listens to it because, well, here's that meme. Oh, you got to see this video. It's so funny. Or look at this, or look at that. And, this is how rumors start as well, isn't, and that's it. So, and that is the whole problem, that is the whole problem, is that now Uh, there is so much information, so much noise coming at us, so many emails. In the old days, pre-email, would we get the occasional note, a letter through the post, something like that? You sit and open your mail and throw half of it away and deal with the rest of it. Now it's just 24/7, constant, and I think that is the problem. The human race is deliberately being dumbed down. But I don't want to sound like a conspiracy theorist, except I probably am. But there is something afoot to dumb everybody down to the point of passing jokes around or music, and they have no idea what lies ahead.
Well, it's called bread and circuses, isn't it?
Yeah, yeah.
Distract everybody.
Well, there's a kind of a military grade psychologist who I think he was on the Joe Rogan podcast. I'm not quite sure, but I've definitely got links to him on YouTube that I wanted to share as part of my media pick. And he is saying that this is being controlled exactly as you said. So I'm so pleased that you jumped in with that, because that reminded me that I wanted to share that video, and I was going to use a different pick, but I'm going to use that one. It's just absolutely fascinating. He's saying that the media is being controlled to the point where we are being stirred up on purpose, and we need to just be careful with what we're being shown.
Well, the BBC's just been found guilty of doctoring clips of Trump with a way to try and suggest to people that he was inciting violence at the January 6th rally.
Yeah,
and the footage has been doctored and selectively edited. So
has that has it been confirmed, Tim?
Yeah, it's been confirmed. The BBC has not been a trustworthy purveyor of news for a decade or so, easily.
Yeah, I mean, a lot of people have lost trust in the BBC, and it's kind of, isn't it?
The fact that they have their own BBC verifying staff suggests that they're well aware of it and they're trying to fight back.
Well, isn't it strange that at a time when you would need a trusted source more than ever, you haven't got a trusted source? It's like it would be the perfect time to be absolutely as transparent as possible. And yet you can see that by the nature of the stories that have gone on that they haven't been, or they've not appeared to be. And that's why a lot of people got extremely frustrated and have cancelled their BBC licenses, and it's quite hard to do that. You've really got to, there's a lot of work in getting rid of your license. But anyway, so on to media.
Well, let me add to that. What
Brilliant.
you're saying there is no trusted source. So this is what's opening the window for the next false messiah to come along to effectively lead the crowds. This is where we're at. We're at a tipping point in socioeconomic behavior, because everybody is so ineffective. It's only going to take somebody who's a great orator, that's going to be able to swing people around. And that's what we're seeing with some of these fringe groups. And some of them are not even fringe, are becoming very mainstream.
I think that the rise of the reform has actually surprised a lot of the political parties, a lot of people. They didn't see it coming. But if they really knew what people were getting riled up about, it wouldn't have been so surprising. Would you agree with that, Tim?
Absolutely.
Yeah, it seems like they don't have their finger on the pulse. They seem to do things all the time that you think, hang on, this is not what people are angry about. The winter fuel allowance and all the things that have gone on, the farmers, etc., and the taxing the farmers, and people are now worried about the food supply. And as you've said, there could be prices going up for whatever reason, but we're kind of seeing that the government's almost engineering it. And it's really worrying. So anything that comes in and says, no, that's madness, I'm going to do something, seems to be a good option. But even that might not be a good option.
Sorry, I'm sorry, you just cut out there.
Oh, did I?
Yeah.
Oh, sorry. So I was just saying I was just saying that the this person, this orator that comes in and is now seen as this sort of force for good and is going to correct all the problems that we can all see are building up. Will that be like a false messiah, and that person's actually just going to be just as bad as all the others, and if not worse? Or will this person be someone who actually unites everybody, sorts all the problems out, clears the Augean stables is the term that I've heard Tim use? Is that the correct term?
Cleaning the Augean stables. It's I think it could well not be a person. It could be AI.
That's interesting. Well,
Yeah.
I would say that I don't for a minute think there's going to be an altruistic leader. I think in these cases there's somebody that has a mission and so on. And I think in all these situations you've got to make some party or some group a scapegoat. And I think that's how human behavior works. Human behavior itself is not generally uh, sort of aimed at having an altruistic alignment. It does happen, but I think in times of this, it's kind of like they will come along as like we can save you, but there's always another agenda there, and that's why we see these increases in discrimination and alienation of groups and so on. So. And that's why, this is the whole notion of this idea of a potential American Civil War. I think we could be impacted to some extent. I think we're in a different situation. But yes, that's what concerns me is the climate is now set for some potential extremist to arrive, and they might already have arrived. They might, not present themselves as an extremist. But what tends to happen in all these things is that they start off with a lot of sensible stuff and then they gather momentum and then they start showing us a little bit more extremism in some ways. And I think, if you study the rise of Nazi Germany and especially those that got involved with things like the SS or whatever, actually a normal Germans, they were kind of like, well, the country was a mess and it all seemed like a good idea at the time. And then it was like, it got a bit more extreme. It wasn't really comfortable, but we went along with it. And the next thing is it's got critical mass. And that's just one example. You'll see this in human behavior in other sort of political regimes as they grow. And of course, if you don't then toe the line, fear comes in as well. So, it's kind of like, well, everything's okay as long as I keep my head down, as long as I'm a white Aryan in that, in those days, you'd be fine. So that was this sort of thing. And I'm not, belittling any of this. I'm just pointing out this is how momentum grows in these things. And if we want to put it into what we talk about, this is how we get blow off moves, in markets. Who's buying gold right now at this point? Joe Public suddenly heard that gold's a pretty good deal, just as it's making a temporary intermediate high. And I mean, this high might be in place for a few weeks or months, but they're probably going to get burnt on this. We see a pullback, and then we can possibly get back in again. We'll get an idea when we look at what the smart money's doing and so on. But this is the whole point: is that people get sucked into things they don't really understand, and then it's part. You're part of the gang. Everybody's talking about gold, so everybody was talking about Bitcoin, and we're talking about pilots and flying. I know some colleagues that bought Bitcoin way back when, and there are three of them, and they've got over 100 million in Bitcoin holdings, and they're adamant now that suddenly they had a normal job and an above average salary, but now they've got super money, and they're frightened that they lose 2 or 3 million in a day or whatever, and it's all a bit weird, right? So this was the bubble, the Bitcoin bubble. Everything just shot up, and everybody jumped on board. They were a bit savvy in this case. They got on it earlier than most, but that's the whole point. This is how human behavior works in a bubble. Everybody wants to get on board, FOMO, and then of course we get the opposite. We get the capitulation and blood on the streets, and people cannot dump their stock fast enough just at the lows. So it's the same idea in human behavior as well. It's like, well, it's best I get on board with this, and so on. So those are just my thoughts. I could be wrong.
It sounds like, as Tim was saying, the human behaviour doesn't change, and it will just repeat, and that kind of plays into the whole idea of cycles, and the Winston Churchill quote that those of you who aren't willing to learn from history are doomed to repeat it, and it all ties together very nicely. So, brilliant. So, Tim, do you want to give us your media pick?
Yeah, my media pick for this week is an essay in Compact magazine that a client put me onto a week ago. It's called The Great Feminization by Helen Andrews. And the central premise is that society is in the mess that it's in. And I'm not going to win any fans among our female listeners if we have any, but the essential argument is that society is in the mess we're in because women now have dominant positions in most jobs. and they
Wow.
tend to prioritize emotion over logic, and that has potentially disastrous effects.
Wow.
It's called the
That's
Great Feminization. It's very, very thought-provoking.
That's quite a brave one to put out there, but yeah, I mean, I that's a whole topic that we could spend.
Nothing ventured, nothing gained.
I'd love to get someone on to discuss this actually, because I think it would be really
Well, if
interesting.
listeners have anyone they'd like to propose, then bring it on.
Yeah, I really would, because I think it's absolutely right that women have got superpowers in areas that men don't have, but it's also the reverse is true as well, and we should be celebrating those differences rather than trying to merge everybody together and say everybody's the same. So, yeah, I'd love to discuss it. So, Andy, do you have one for us?
We're talking about book or film. What would you like first?
Whatever you like.
Book and film, whichever one you want to do.
Books, the one that I've read that's really struck a massive chord with me in the last few months, not the most recent one I read, but the one that really I think everybody should read this, Confessions of an Economic Hitman, 3rd edition by John Perkins.
Oh, wow. Yeah, that reminds me of Zeitgeist, and they talked about an economic hitman. Is that the same thing, where they go into a country and they take it over, or they cause a coup, and then they take control of the energy, start pushing the energy.
That sounds like the
prices
CIA playbook.
That's exactly what it is. It's exactly that. He spilt the beans on it. And from my point of view, I mean, he was that person. I'm surprised he's still about, having published all the inner secrets and the underhand operations. But for me, not only is it incredibly eye-opening, I'm able to see the cycles between them as well. So it's a double one for me. That one is the one book that's I'm going to read again with the highlighter.
So that's your bedtime reading, is it? It's your holiday reading if you get one. Excellent. Yeah. Super. That's really excellent. Well, Andy, thank you so much for coming on the podcast. It's been brilliant. There's a lot to digest. It's sort of one where we might have to listen to it a couple of times, but just remind us where people can find you on your handles and your website.
Great. Thank you. Well, thank you, Paul. Thank you, Tim. The place to go, markettimingreport.com. That will show you all our products, especially the Market Timing Report. You can get a trial of that. We're also going to give you a link that you can download the Cycles Convergence Report. I'm on Twitter, Andrew Pancholi. LinkedIn is a good place. And also on Facebook, I think it's Elite Cycles or something like that. So, if you want to find out more, just come and says, not to mention the YouTube channel. That's where our most up-to-date information is. In fact, we just put a video out a few days ago on gold and how the timing caught the high as well as the price. So that's probably the place, the YouTube channel now, which is Market Timing Report, and my name, Andrew Pancholi.
So where are you most active in social media? Would it be on X or on the
YouTube?
On YouTube
at the moment.
Yeah,
YouTube.
Brilliant. Well, I'll put links to everything and people can choose where they want to find you. Once again, thank you so much for coming on, and we look forward to having you back and to see where we are with all these predictions. It's going to be fascinating.
I look forward to it. Thank you both so much for having me on your podcast. Really appreciate it.
Thanks, guys.
Thanks, everybody. This podcast is for entertainment purposes only. Please do your own research or contact a professional advisor.